What's your view on investing in China right now? So of course we got your view on investing in India, and it still stays the way it is, of course with the kind of reservations that you might have for a year or two of bumpier period returns. But what about China? What's your view on China largely?
So let me start with a disclaimer. 1 year back I felt Indian markets are expensive and China is cheap. In the next 12 months India still gave more returns and China gave more negative returns.
Right.
So in that context my view honestly doesn't matter, or most views don't matter. Market has to do what it has to do. Hopefully in the medium term my views will stay relevant. So broadly, statistically, any market at 10p which has the largest second largest economy in the world, if they do some of the basic things right, you should not lose money from here. But China also has huge policy risk, political risk, which I don't understand. I have no claim to say I understand anything in China. ये तो language ही नहीं समझ आता पहले तो how do I really say that ये अच्छा है बुरा है? But statistically what we have seen that large countries like this or large companies in China, when they are at such low valuations, and if they go back to reasonable growth, valuations should mean revert. You will end up not losing money and hence making some money. So tactically some exposure to China is fine. So we also in my own, so I have this DSP value fund or DSP multi-asset fund where around 3-4% of the fund has been allocated to a couple of companies in China, and apart from around 15 to 30% in some other global stocks also. So that's one way in which I would invest. But do I have very decisive view on so many companies in China? No. So the other way is to invest in a global China fund where someone is sitting there and analyzing those businesses so that you have local expertise, because sitting here our expertise is virtually zero to interpret or understand what's happening there. But definitely valuations are compelling. We go by base rates that most likely from these type of valuations, at least with a 5-year view, you should not lose money.
Got it.
And my approach is normally by asking this question, where will I not lose money, rather than where will I make money. If I don't lose money, more or less return ban jata.
Right, got it. So for that, like you're saying, the journey from 1 to a 0.5 to 4 can be done by internalizing good processes and building domestic companies. But if you have to grow from 4 to 40, you have to globalize your processes.
I'm assuming, look at China's template. If China, I think, is at 16 or 17 trillion,
close to 20.
No doubt they have their own local economy, which is where per capita is high, so huge consumption locally as well. They have large scale. So we also can achieve that scale because the population is there.
Right.
But population doesn't always mean more profits, because that population has to be a wealthy population. They need more jobs, their savings has to be large so that their spending is meaningful. But China also exports to the world. So it has to be a combination of both. Yeah.
So like we were talking about, these kind of probabilities and, being in China, even though the GDP is increasing, the returns are not, right? Whereas staying the same in US, it grew, right?
Because the ROEs didn't happen. So US has 18% ROE. China doesn't have ROE. China ROEs are low. So they've put a lot of capital. There is profit growth, but that's not reflecting in quality. So the return on capital has been very poor. Capital efficiency has been very poor, and that is one of the reasons why in investing these rules of capital efficiency become very important.
Right.